Stop complicating your investing. You're struggling with this market because you think you're smarter than the market. You're not. Most people chase shiny stocks, time the market, and lose. Here's the truth. If you want to get rich, invest in these 3 ETFs that already work. I'm talking insane growth, fat dividends, and almost zero effort. SCHG, JEPQ, and VOO. These are the 3 ETFs that are crushing the markets. By the end of this video, you'll have a bulletproof plan to start building real wealth today. No excuses, no fluff. Let's go. Most people lose at investing because they make 2 critical mistakes. They think they're smarter than they are, and they ignore what already works. You pick stocks, you try to time the market, and you chase shiny objects. Here's the truth. Most people suck at it, and the stats prove it. Let me break this down. If you invested in the 3 ETFs I'm about to show you, SCHG, JEPQ, and VOO, your results would crush 90% of the people trying to beat the market. Here's the data. SCHG, 48.35% total return over 3 years. JEPQ, 51.4% total return over 3 years with a 10.1% dividend yield. And VOO, 36.21% total return over 3 years. And that's with zero stock picking, zero stress, and almost zero effort. You just buy and hold. But here's where you fail. You overcomplicate. You hear about a hot stock and chase it. You see the market dip and you panic. You sell. Then what? You miss the recovery every single time. The best investors don't act like this. Buffett doesn't sell when the market dips. He buys. That's why Warren Buffett is the GOAT. The difference between you and Warren, he keeps it simple. You don't. So here's the wake-up call. If you're losing money, it's not because investing is hard. It's because you're making it hard. Stop. The strategy works. These ETFs work. You just need to act. If you're tired of losing, listen up. This video will change how you invest. You want growth? You want to build real wealth? SCHG is how you do it. SCHG stands for the Schwab U.S. Large Cap Growth ETF, and this is where the winners live. Companies like Apple, Microsoft, Amazon, and Google, the giants, the unstoppable innovators. These aren't cheap penny stocks. This is the future. Here's why SCHG is so powerful. It's simple. It focuses on the companies that are already winning, and guess what? They keep winning. Let's look at the numbers because the numbers don't lie. SCHG is up 42% year to date. In the last 3 months, 15%. The expense ratio, 0.04%. Basically, it's free to hold. Compare that to some actively management funds charging you 1%, 2%, or even more while underperforming. You're getting ripped off. SCHG lets you hold the best companies for pennies. So why aren't more people buying it? Simple. They're distracted. They're chasing small cap stocks that might blow up, meme stocks with hype but no profits, and other trash. Stop doing that. If you want consistent massive growth, buy SCHG, period. SCHG doesn't gamble. It bets on the giants, and the giants don't lose. These companies dominate their industries. They have the cash, the scale, and the growth. You're not betting on potential. You're betting on proven winners. Action step? Buy SCHG now. Don't wait. Every day you're out of the market, you're leaving money on the table. If you want growth, stop guessing and start winning. Let's talk about JEPQ, the ETF that pays you to be patient. You want growth, you want cash flow, JEPQ gives you both. Here's how it works. JEPQ focuses on tech, the NASDAQ giants like Microsoft, Apple, and Google. But here's the twist. It pays you a fat monthly dividend. Right now, that dividend yield is 10.1%. Let me put that in perspective. You put $10,000 into JEPQ, you're collecting over $1,000 a year just in dividends. That's real passive income. And while you're getting paid, your investment is still growing. Year to date, JEPQ is up 17%. And the dividends and the total return this year, 27.54%. But here's the real kicker. I'm not just telling you this. I'm heavily invested in JEPQ. On December 4th, my JEPQ dividend checks totaled $4,426.93. That's over $4,000 in passive income in 1 month. Imagine seeing that hit your account. Now, here's why I own JEPQ along with SCHG and VOO. Sure, I do a lot of aggressive investing. I chase big opportunities when I see them. But JEPQ, SCHG, and VOO are the foundation of my portfolio. Why? Because they work. They give me much needed stability and consistent growth while everyone else is panicking. These ETFs let me sleep at night. Most people ignore ETFs like JEPQ because they think it's boring. Guess what? The boring stuff makes you rich. Dividends compound, growth stacks. JEPQ does both. Bottom line, JEPQ is a no-brainer. You get tech growth and massive income. Stop betting on hype, start building real wealth. The action step here, just buy JEPQ. Take the cash, reinvest it, don't wait. Every month you sit out, you're losing money. If you're serious about getting rich, you need VOO. This is the Vanguard S&P 500 ETF, and it's the single best investment for building long-term wealth. Why? Because VOO tracks the S&P 500, the top 500 companies in America. Think Apple, Microsoft, Coca-Cola, Google, Tesla, the giants, the companies that drive the entire economy. Let me hit you with the numbers. Year to date, VOO is up 28.52%. Over the past 3 years, the total return is 36.21%. The expense ratio, 0.03%. Basically free. Here's the brutal truth. Most people try to beat the market and fail. The S&P 500 has delivered consistent returns for decades. It's a proven wealth-building machine. Warren Buffett himself says, if you don't know what you're doing, and let's be real, you don't, just buy the S&P 500. VOO is perfect for 2 reasons. 1, it's safe. You're spreading your money across the 500 biggest companies. 2, it's simple. No stock picking, no timing. You buy VOO and you hold it. That's it. Most investors screw this up because they think safe means slow. Wrong. The S&P 500 has averaged 10% annual returns for decades. You double your money every 7 years without lifting a finger. That's not slow, that's unstoppable. The bottom line, VOO is the foundation. Without it, your portfolio is weak. SCHG gives you growth. JEPQ gives you cash flow. VOO gives you rock-solid stability. Your action step, buy VOO. Keep buying it every month. Build your foundation. This is how you win. Here's the problem. Most investors have portfolios that are all over the place. Random stocks, overlap, no plan. That's why they lose. You don't need 20 stocks. You need 3 ETFs. SCHG, JEPQ, and VOO, because together they're the perfect team for a simple portfolio. Each one has a role. SCHG is your growth engine. It targets large cap companies growing fast. Amazon, Apple, Microsoft, the titans of innovation. It's like rocket fuel for your money. JEPQ gives you cash flow and growth. It pays you a 10.1% dividend yield every month while still riding the upside of tech. That's rare. And VOO, it's your stability. It tracks the S&P 500 and delivers consistent long-term gains with almost no risk. Think of it like this. SCHG is offense, JEPQ is your steady income, and VOO is defense. Together, they cover all the bases: growth, cash flow, and stability. Here's the magic. There's very little overlap. SCHG and JEPQ focus on growth, but JEPQ adds dividends. VOO balances it all out by spreading risk across the top 500 companies in America. You're not overexposed to any one stock, and you're not missing out on growth or income. The average investor overthinks. They complicate their portfolios and end up losing money. You keep it simple. These 3 ETFs give you everything you need to build massive wealth. Your action step, buy all 3. Split your money evenly, automate monthly investments, growth, income stability, done. If you're not doing this, you're making it harder than it needs to be. Stop guessing, start compounding. Most people panic when the market dips. They see red, freak out, and sell everything. That's why they stay broke. You know what smart investors do. They buy. Here's the truth. Pullbacks are not the end of the world. They're opportunities to get rich. Stocks don't go up in a straight line, and neither do ETFs. SCHG, JEPQ, and VOO will have pullbacks, and when they do, you should thank the market. Why? Because pullbacks let you buy assets at a discount. Let's say SCHG drops 10%. If you believe in Apple, Amazon, and Microsoft, then it's on sale. You wouldn't freak out if your favorite sneakers dropped 10% in price. You'd buy 2 pairs. This is the same thing. The difference between people who get rich and people who lose: the rich love pullbacks. They buy when everyone else is scared. It's that simple. Warren Buffett calls this being greedy when others are fearful. You don't need a crystal ball to win. You just need the guts to buy when the market hands you a deal. Here's the move for this 3 ETF portfolio. Stop checking this portfolio every day. When SCHG, JEPQ, or VOO pull back, don't sell, don't panic, buy more, add to your position. Pullbacks are a cheat code for long-term wealth. Over time, the market goes up. History proves this. If you're not buying during the dips, you're sabotaging your future self. Your action step: when you see red, see opportunity. Buy the dip, buy more, keep holding. That's how wealth is built. You will not time the market. You think you can. You're wrong. Nobody can consistently. Warren Buffett doesn't even try. And yet, most people sit on the sidelines waiting for the perfect time to invest. Guess what? That perfect time doesn't exist. Here's the reality. If you're not in the market, you're losing money. Inflation is eating your cash. The market is moving without you. So stop overthinking and start using the single best strategy for regular people: dollar cost averaging, or DCA. Here's how it works. You pick an amount, $100, $500, $1,000 a month, and you invest it into SCHG, JEPQ, and VOO every single month. Whether the market is up, down, or sideways, you keep investing. It's automatic, it's foolproof. Here's why it works. When prices drop, you're buying more shares. When prices go up, the shares you already own are worth more. Over time, you're guaranteed to get an average price. You're not timing the market, you're beating it with consistency. Look at history. The market has gone up over time, averaging about 10% annual returns. If you invest consistently, you don't need to worry about short-term dips, headlines, or crashes. DCA removes emotion. It removes panic. It removes guesswork. And the reason why most people fail: they try to time the market, get scared during dips, or sit out waiting for a miracle. You stick to the plan. You invest every month, no matter what. The action step: automate your investments. Set up a monthly buy for SCHG, JEPQ, and VOO. Never stop. The market rewards patience. This is how average people can get rich. So here's the deal. If you're serious about building wealth, you need a plan, not a theory, not a maybe, a step-by-step game plan you can follow right now. Here's exactly what to do. Buy SCHG, JEPQ, and VOO. Split your money evenly across all three. No second guessing. Set up the automatic investments. This is dollar cost averaging. Whether you have $100, $500, or $10,000 a month to invest, just commit to it. And then ignore the noise. Stop checking your portfolio every day. Stop listening to market gurus predicting doom and gloom. Focus on the long-term upside. And remember, SCHG gives you massive growth from the fastest growing companies in the world. JEPQ pays you cash flow while still riding the upside of tech. And VOO gives you stability. It doesn't matter if there's a recession or a boom. Over time, these ETFs will grow your wealth while everyone else panics, guesses, and loses. Here's the reality. Today I've handed you a 3 ETF portfolio that anyone can use to get rich. But if you're the type of person who really wants to step up your game, who wants to move faster, get sharper insights, and take investing to the next level, then join my Patreon. Inside, I give you real-time trade alerts, my top plays, and daily breakdowns of what's hot in the market. This isn't theory. These are actionable moves you can use to stay ahead of the curve. If you're ready to level up and stop guessing, join the Patreon. The link's in the description. Stop waiting and start building wealth. Peace, and I'll see you on the next video.